Well, it's already been a very busy week for Buffett. In the last few days, we learned that he likes investing in the western part of the U.S. He put another executive onto his Berkshire board and also is slicing down his stake yet again in Moody'S, which is a credit rating agency under fire by regulators. Now, here to talk about where all of that leaves Buffett in the new year is Meyer Shields. He's an analyst at Stifel Nicolaus. And Meyer, great to have you with us.
Thank you so much.
And, for those of us who follow Buffett regularly, we know that, we tend to think that we know what he's thinking when he's making his moves. Altogether, what does this tell you? Is Buffett just sort of getting all his ducks in a row before the annual meeting or before the annual letter that he puts out in March?
I don't think so. I think it's just a matter of looking at each individual situation and making sort of the warranted move there. As he continues to age, I guess we're going to see a greater emphasis on having some sort of plan to the next set of senior management. Some bolstering the board from that perspective makes sense. Moody's, I think, is a very Moody's-specific decision, and that is that the rating agencies did not distinguish themselves during the most recent financial crisis. And there's a pretty good argument to say that the moat that Buffett likes to see in his companies is shrinking dramatically with regard to the rating agencies. It's probably analogous to the newspaper that he owns in Buffalo.
Right, indeed. The moat is disappearing quickly for Moody's. Do you get the sense that he wants to eventually get entirely out of the agency?
Well, there are two possibilities. One is that he wants to get completely out of the rating agency business from an ownership perspective. The other one is that seeing that there's an opportunity for maybe a new, less tarnished reputation company to come in, I think it's a possibility that he'll enter that on his own.
And do you expect, because obviously his annual letter is very closely read, do you expect that he will mention Moody's or mention the credit rating agencies in his annual letter? And if he does try to sell out completely, is it going to be a write-down for him?
Well, the first answer would be yes. I think he'll reference it because it's one of the biggest position changes we've seen this year, obviously other than Burlington. And in terms of the pressure, there almost has to be, I think. Once it becomes or continues to become clear that he's exiting a stake, then you've got a lot of overhang on the shares.
Okay. And Mayor, getting back to Burlington, which was, his big gangbuster deal just a month ago or so ago, some had said that signals how there's a turning point here at Berkshire. He's now looking into railways. Not, the insurance company part of Berkshire is still strong, but that he's sort of transforming this company in preparation for a successor. What are your thoughts on that?
That's interesting. I think we've probably crossed the Rubicon in terms of minimizing the insurance stake a while ago. Obviously, if there were other insurance properties that were available and weren't as laden with toxic assets as maybe AIG was earlier in the year, then there would be continued acquisitions there. But I think for the most part, the diversification angle itself doesn't concern Buffett. He's always talked about diversification as being a benefit for people that don't know what they're doing. But I think he's identifying individual businesses, and statistically speaking, more of those are going to be non-insurance companies than insurance companies.
Okay. All right, Mayor. Good to talk with you. Thanks so much. Talking about Buffett, that was Meyer Shields of Stifel Nicolaus.